A very good morning and welcome to Core Finance TV. I'm Malcolm Grahamwood and today I'm doing a CFO interview. And today my guest is Julian Maurice-Williams, the CFO of Chariot Oil and Gas. Welcome, Jules.
Thanks, Malky. Great to be here.
Yeah, great to see you for the first time here. So very much looking forward to having a chat today about Chariot, which has been very much in the news in the last few months. We'll go through that in a minute, but if you could just give us an idea to begin with, a little bit about yourself, about Chariot, the overview of the company, that would be really helpful.
Yeah, absolutely. So I'm a chartered accountant by training. I've been at Chariot for the last 7 years, and for the last 4 years I've been CFO. As far as Chariot Oil and Gas, so we are a London Stock Exchange AIM-listed oil and gas company. We are focused on the Atlantic margins, and we are in Morocco, Brazil and Namibia. We have a balanced portfolio, so we have giant elephant-scale transformational oil prospects, and we have audited gross mean prospective resources of over 5 billion barrels. In addition, we recently were awarded a low-risk gas development project off the coast of Morocco. And what's fantastic about that new project, which is the Lixus license, which contains the Anchois discovery, is that it points us towards future revenues and significant cash flows. Excellent.
So you mentioned you've just recently acquired the Lixus license offshore Morocco, but not very far offshore Morocco. What was the thought process behind this? Why don't you talk us through what you've done? You talked about some balancing of risk and so on, but talk us through the deal.
Yeah, absolutely. Bringing what this license does, and I'll talk a little bit more detail about it in a second, is it broadens that portfolio, it puts balance in that portfolio. So what it does is it brings in low risk discovered gas resource. It then brings in low risk nearby exploration within the block, which could be tied into that gas development, as well as low risk exploration elsewhere in the block, which could potentially be done as a standalone project. And as I said, it points us towards significant future cash flows.
Excellent. So you've got the hydrocarbons. We'll talk about that in a minute, and a clear path to monetization, which is good. You've got over a TCF of gas. I noticed that you had an upgrade of the CPR fairly recently. You could tell us about that. And of course, in Anchois North, it is Anchois, not Anchois, so Anchois North, you've got 308 BCF. This is meaningful amount of gas, and we'll talk about how you transport it from offshore into the onshore in a minute. But a meaningful amount of gas in that CPI, yeah?
Yeah, absolutely. If I just give your viewers a quick reminder about the license.
Please do,
the license we were awarded just a couple of months ago, so at the beginning of April. It's the Lixus license. It's just north of our existing acreage offshore Morocco. So our existing acreage in Morocco is the Mohammedir and Kenitra licenses. The license is about 2,500 square kilometres in size. What's different, as we've already discussed a little bit, is that this license has had 3 large seismic campaigns carried out across it and 4 wells drilled. And one of these wells, the Anchois well, was a significant gas discovery. So that well went through 55 metres of net gas pay in highly porous rock. And then since we've been awarded it, so it's only a couple of months ago, we've had a competent persons report carried out on the Anchois discovery itself. We've then had a further competent persons report on the Anchois satellites, which you mentioned a second ago. And in total, that comes into at over 1 TCF. And to put the Anchois discovery in perspective, so just the Anchois discovery, excluding the satellites, that's equivalent to a 70 million barrel oil discovery. So this is a really significant thing for Chariot.
Excellent. Now, my next question would have been monetization and how you get it offshore to onshore. But fortunately, earlier this week you made an announcement which I'd like to talk through, and it sort of breaks into two because it was the feasibility study which you had on the asset and the Moroccan gas market. So let's leave the Moroccan gas market aside for a second. Talk us through the development feasibility study.
Yeah, absolutely. So both of these studies have been carried out by third parties on our behalf, and both of these studies are very positive. if we deal with the development feasibility study, first of all, this is a feasible project. This is a very feasible project. The development option that we are focusing on is a subsea to shore development. So that would involve subsea producing wells, which then tied into a subsea manifold, and from there a flow line to shore where you would have a CPF, which is the gas processing facility. And from there, we're only 30 kilometres to the Maghreb-Europe pipeline. And from there, we can supply Morocco with gas and potentially access the European markets as well. Now, what's great about this particular development option is that the wells, we know from the Anchois-1 well, will be normally pressured and temperatured, so there's nothing complex there. And we also know that the rock is highly, highly porous, so these wells will flow at a very high rate. In addition, we know that the quality of the gas, so it is 99% C1 to C4, and there's no nasties in there. So this is really sales quality gas that can be plugged straight into the network. It's also worth noting that this is a very simple and standard development. This kind of development has been done in lots of other places of the world. There's nothing complex here. The kit that would be used, you can practically take off the shelf.
And you're drilling into the same Anchois-1 well that was drilled before.
But potentially, yes. So the Anchois-1 well was suspended, so we can potentially re-enter that well as well. So there's further sort of cost savings that can be made there.
That's good. I mean, because even I can work out about the manifold and the subsea and so on. And is it 30 kilometres? How far is it away?
It's 40 kilometres. 40 kilometres from shore. It's just south of Europe. If you look, so it's just south of Tangier. So you've got the Maghreb-Europe pipeline, which goes within 30 kilometres of where landfall is. And goes straight up to Spain, and that particular gas pipeline services about a third of the Iberian Peninsula's gas needs. So
we've seen so much activity in Morocco. So actually, we can now go on to the second part of the announcement, which was the Moroccan gas market. So you've already indicated there, saying that you can go into the Maghreb gas pipeline and sell it in Europe, or you could develop some sales in Morocco itself, in country.
Well, absolutely. So the first thing to say, it shouldn't be a surprise to anyone that the Moroccan market is an expanding one, an exciting one. The energy demand in Morocco has doubled since the turn of the century to 2015. And from 2015 to 2030, the energy market is expected to double again. And so Morocco is energy hungry and it's gas hungry. And what's fantastic is the gas price is also high. So we know from other players in Morocco the kind of things that they've put out that a gas price of $8.50 an MCF is achievable. Now, to put that gas price into perspective, that's a multiple of what Henry Hub is. So it's a multiple of what US gas price is. So this is a great gas price. Also, it's worth noting that in Morocco, it's some of the best contract terms in the world, best fiscal terms in the world. So we get a 10-year tax holiday from the start of production. And when with our models that we do internally, when you start chucking in a project which is standard and straightforward, a gas price which is high, a 10-year tax holiday, you've got the European market right there. The kind of figures that it chucks out are really quite impressive. And that's why we've got so much excitement already from the partnering process.
I can't imagine you want to send it into the pipeline up into Europe. So, but it does leave you several options. And the other options, as far as I can understand from reading your RNS, was that you can do this in one phase, or you can do it in a number of phases. You can get started straight away, and then do it as reasonably as fast or as slow as you want to. Is that right?
Absolutely. Well, this is the sort of beautiful, why it's so good having this sort of subsea manifold. So we can do it all in one go if we want, or we can do in stage process and tie those production wells into the manifold and into the system. And the way we will decide how to do it will be based on economics. So it's about maximising the return to our shareholders. So that's how we will make the decision on that process.
Excellent. And when you say maximise from those wells, there'll be a number of other wells as well in the area which are the further away from Anchois-1 that you'll be looking at at a later date.
So the Anchois discovery itself is made up of 3 gas sands, A, B, and C. And then further away, surrounding the Anchois discovery, are the Anchois satellites, which we put out the competent persons report for a few weeks ago. And the intention is that those can be tied into the existing development of Anchois.
Yeah. So we're moving quickly on, because I mean it's this is potentially something that's going to. We'll come back to the money in a minute. Going to keep you busy for the next year or so. Just before we move on to the further stuff, I'd like to have a quick word about the rest of the portfolio. Well, people remember you for drilling Rabat Deep and in offshore Namibia last year, for which you were carried and so on. What's the plan? Are you they're still in the portfolio? You're still doing some serious work on them and so on? What?
Absolutely. Our giant elephant scale kind of transformational stuff is still very much a focus, and we will continue to push for that. If I go country by country, so we'll start in Morocco. We did the Rabat Deep 1 well last year, which E&I fully carried for us, so that was a zero cost well. That well really did two things. First of all, it pointed us towards Elixis, which obviously we picked up the Elixis license, which we picked up a couple of months ago. And in addition, it helped to upgrade, so the learnings that we got from that will upgrade the prospectivity within the Mohammedia and Kenitra licenses, which are the other licenses that we have in Morocco. And the prospects that we are focusing on are Kenitra 1 and Mo B, and we've recently been awarded the EIA for drilling in those. And then in Namibia, we have a very large area there, so over 16,000 square kilometres. We drilled the prospect S well last year, which obviously operationally was carried out in excess of on time, safely, and significantly below budget, but technically wasn't successful. So what that has done is it's downgraded some of our prospectivity within that block. But because it is such a large area, there is still significant prospectivity elsewhere in the block. And we noticed that there are, Namibia is a hot area of the world.
Yeah, very hot.
Lots of people have come into it, big players have come into it, and we are aware that there are, several wells nearby which are going to be drilled in the near term, and we'll be watching those with great anticipation.
They might even de-risk a bit of your portfolio.
Potentially,
yes. And I've talked in this studio with other people about that, and there are some exciting things happening there. Before we leave Morocco and Lexus and everything else, one of the key things about Chariot in general, but also in Lexus in particular, is partnering opportunities. You've talked a lot about them. You've always talked a lot about them. In my view, it's been something that Chariot has been particularly good at. Bringing in partners, you've just mentioned being carried for Rabat Deep and so on. Tell us what you might want or need in terms of sort of key strategic partners at Lexus, because you've got, apart from the on-him stuff, you've got it on your own 75%. Tell us about the partnering opportunities and how far down. I mean, I know you've started already, and you're quite a long way down, working through the process.
Yeah. So the first thing to say about partnering is, as you mentioned, we've historically been very successful. So over the last few years, we brought in BP, we brought in Petrobras, we brought in Cairn. We've brought in Woodside, we brought in E&I, we brought in Azenam. So we've been very successful. In the last few years, for 3-4 years, we brought in over $40 million back into the business through partnering, and obviously the zero cost well that E&I drilled for us in Morocco. What's different about Lexus is historically, when you're looking at those giant elephant scale prospects, it's actually a relatively small subset of people who might be interested. So those are sort of E&P players basically. With this license, with a gas development, with a high gas price just south of Europe, it's a far larger sort of broader set, and that involves people such as potential off-takers, contractors who might want a bit of the action, other energy players, as well as obviously the E&P players. The other thing is that historically when we partnered in Morocco, obviously we went from 75% to 50% to 10% in the E&P well. Well, we've effectively almost had a Rabat Deep discovery with this, but our share of a Rabat Deep would have been about 70 million barrels of oil. Well, Anchois 1 is a 70 million barrel oil discovery, and we're at 75% now. So we're not 10%, we're 75%, which is a completely different game. And it gives us enormous flexibility within the partnering process, which is a really fantastic place to be in.
So you've got a long list of people to speak to, and how that's going to be whittled down. And actually, the process is going reasonably quickly, I understand.
It is. I mean, we kicked off the process immediately upon announcement, and we've gone out and we've contacted, well over 100 people already. There are people who are up early, well dressed, who are looking at it seriously, and there are people who are still coming through the data room. So we're genuinely really excited. I think it's also worth focusing on something we don't always talk about. Is one of the reasons why Chariot is successful at partnering. We say we're successful, but why we're successful. And we pick up assets and licenses that we think they're prospective, we think they've got developments, or like for instance, Anshul where they've already got a discovery in. But at the same time, we also drop licenses as well. So if we think things are not good, we will drop them, and therefore we continually upgrade our sort of prospect inventory. So it's what John West rejects, which makes John West the best. And that's what we apply. And I think also we have a excellent in-house commercial, technical, and operational team. So we do it all in-house, and that means we really own those assets. We really live and breathe those assets and understand them. And that means that we can tell the story far better to potential partners.
Yeah, and the way it's going is so successfully, and with so many people, as you said, up early and well dressed to look at the prospects. I mean, there'll be people who've been there thinking, this is going to be another year or so. But in fact, it's quite possible that you'll be, you could be announcing partners, not very immediately, but before too long. And the people are there; they're keen to get on.
Well, I mean, we're looking forward to updating the market on that partnering as and when it happens.
Well, you certainly, no one could accuse you of standing still with Lexus, having only announced it in March or April when it was, and with so much prospectivity and the CPR and the developments you've announced this week. So it does look very promising. And the point I was making earlier on about the risk situation is that historically investors have taken the view that it is elephant hunting, a big find which would completely change the game. You've still got those in the portfolio, but actually the change of the risk not just on size and development and everything else, but of timing. These things will come through this year and next, not in several years' time. So I think the partnership process that you've already had set up is really looking good for you in this particular process. And as you said, your approachable market is so much bigger because of that. I want to talk about finances. This has been talked about a number of times because having gone through the wells and everything else, but you made a raise earlier, so you've got cash in the balance sheet. You're the finance director. Talk us through what you've got in the balance sheet, and make it easier for us by saying, first of all, there's lots of talk about how much of that is per share and so on, but what the cash burn is and what your commitments are and everything else. So we know what the cash looks like over the next year or two.
Yeah, absolutely. So our cash at the end of last year was almost $20 million, so $19.8 million. We have no debt, so there's no debt in the business, and we have minimal license commitments. So the only material commitment we have was in respect of the Lexus license, and that's seismic reprocessing, and that will be significantly less than $1 million. Our annual cash overhead, which is our sort of cash burn figure that you could use, is less than $5 million. So in the last 2 years, it was $4.3 million. So we've kept it flat, we've kept it under control. And historically, I brought that down significantly. So a few years ago, it was over $9 million. I anticipate the run rate going forward to be at that rate. What we've also done, we've always been very, very sensible with cash. So for instance, how we've got into this position is last year we had a zero cost well from E&I, which so no Chariot cash went into that license at all, actually, because the seismic was covered by Woodside. And when we have done stuff ourselves, so with the well we drilled and prospected, we've targeted the bottom of the market, the bottom of the market. So that well was budgeted at $25 million gross. We drilled it for $15.8 million gross, not our share. Gross was $15.8 million, And that, I believe, is one of the cheapest wells, if not the cheapest wells, drilled in recent time. And as you've alluded already to the share price, if you take our cash and you divide it by the number of shares, we're only marginally above the share.
Share price is only marginally above the cash, 4p, whatever it is. Of cash.
Yeah, exactly. So between 4.5 and 5p. I believe that as this project continues to progress, that value will continue. Continue to feed through, and I see it as an opportunity for both new and existing shareholders.
No, that sounds right, because there's a huge amount of upside potentially with the share price, given that there's only half a p or a penny in there for all the things that you not only already had in the portfolio, but from what you've brought in with Lexus and so on. It seems like a great opportunity. The time always goes very quickly, I'm afraid, Jules. So what I'd like to do now is try and encompass everything that you've said and just tell us why shareholders should be excited to be on board with Chariot or thinking about buying Chariot. What do you think? What's your vision for Chariot over the next year to 18 months?
Well, as we're aware, we've had a very busy couple of months. So we've picked up this license. We've done the CPRs already. We've done the development feasibility study. We've done the gas market study. We're now doing the seismic reprocessing across the block, which will hopefully true up further gas prospects within there. We're a well-funded business. We've got lots of cash and a long runway to progress this project. And we've got an excellent operational, technical and commercial team, and our share price at the moment is only just above cash.
Says it all. Julian, thank you very much for coming in. Today my guest on Core Finance TV has been Julian Maurice-Williams, who's the CFO of Chariot Oil and Gas. Thank you very much indeed for watching. My name is Malcolm Graham Wood, and I look forward to seeing you again next time. Bye now.